Hello, I'm Lindsay Torbett. I'm the private CFO. As a CPA and CFP, I want to give you a really quick update on some 2011 tax provisions that you need to be aware of. First thing I'd suggest is as you get with your tax advisor or consider your 2010 tax return that's going to be due in the next couple of months, you consider these provisions that are going to affect you next year. There's been some expensing election changes. If you've bought some assets, actually this applies back into 2010, that you can use, and certainly for 2011 and 12, you can expense those. It even can apply to things as so much as leasehold improvements on a building that you might be renting. The main thing is the rate extensions. The Bush tax cuts that came in back several years ago were extended for 2010 and in 2010 for 2011 and 2012. So the next 2 years, we've got the same rates that we've had in the past. The biggest thing there is that the max rate for capital gains and qualifying dividends is 15%. So I think you should benefit from those while they're there. Hopefully they'll stay the case, but I wouldn't bet on it after 2012. The other thing you need to do is consider the estate tax changes. There was some good news in that bill in that they did set the rate, but that's only a 2-year window. That we basically got a $5 million per spouse exemption. So for a married couple, the first $10 million is exempt from estate and gift tax. And that also applies to portability. So there's $10 million between the two of them, no matter how much is used on the death of the first spouse. One thing I would like to caution you on, though, is that many wills that were written prior to this bill, which happened very late in 2010, may not provide the benefit you think, and actually the will may not be beneficial and may do some things you don't want, because many of the old wills said we're gonna give the remaining spouse all of the unused exemption. Well, that might mean that the children get nothing because the exemptions now go up to $10 million. So you need to meet with your lawyer and your estate planning team and say, what do we need to do to benefit from these provisions? While you're doing that, you might also see, do we have the other documents you need in place, your powers of attorney and other things like that to get your affairs in order. So I hope this little quick and dirty simplification of the Tax Act is beneficial to you. I'm Lindsay Torbett. Thanks for listening.